only thing holding it together is some chewing gum. All right, Ted. Well, let's go ahead and get started. We're going to, let me share the screen here. They're all rooting for you, Ted. You got some fans out there.
Well, I hope so. I can't see.
Yeah.
Okay, great.
Let's go, Ted. Okay. Where's the... Okay, we're going to go ahead and start sharing Alveo here. Okay, so that looks like it's coming through okay. And then we'll maximize our Alveo. Kind of get that out of the way. Okay, so here at the boot camp, we've been talking a lot about creating income from the market. That's been our focus this week, is how to derive that consistent income from the market. And that's what we're going to try and do this session, is we're going to try and derive a bit of income out of the market. So the national average in the US, the national daily wage, if you will, is about $173. I think that's 2018 numbers, so it's probably gone up a little bit since then. We're gonna go and see if they've got updated numbers on the government website. But that's going to be our goal. So we're going to try and make about $173 in this little trading session.
Wonderful.
And down here in the bottom left-hand corner, we're starting at 51,236. So I did the math before. That puts our target at about 51,409. So that's our target, 51,409. Now, when we first open up a trading session like this, just for everybody out in the tap room and in the trading room, when we open up a trading session like this, the first thing we want to do is kind of get a sense as to what's happening on the charts, what kind of bias there is, if there is a bias in the market, and try and get a sense as to where we're going to be making decisions on this chart. So we'll start out by, these things are always in the way. We'll start out by taking a look at the hourly chart. Now, for those of you here in the boot camp, we've done this over and over and over this week. We always take a look at the top, the higher time frame charts, and then we kind of work down into the lower time frame charts. So for everybody out in the tap room, and for everybody out in the tap room, we're going to go through a quick analysis and make sure that we've got a good sense as to what's happening right now in the market. So we've had a little bit of choppy trading, because we got some, this was our Monday, just to reorient you, Ted. This was Monday. We traded a big, huge consolidation all day Monday. And then it broke down, it rallied back up, forming an outside range. This, where you get the movement, a signal to the downside. And then when you cross up above that point, you've got that signal to the upside. Then it formed a big, huge consolidation on that top side, and that has since dropped all the way back down. And we're playing on those same numbers that we were playing on Monday's trading session. So the big question is whether this market breaks down during this session, or forms a reversal and moves up during this trading session. Right at this point, we don't have a lot of bias in the market. There's as many signals saying go short as there are saying go long right now. So that'll play into our trading on the smaller time frame charts. So now let's drop down and see if we can get a little bit more clarity as to what's happening. So this is the 5-minute chart. And this is this morning's trading. So what's one of the first things that pops out at you? Look at what's happening here.
Lots of tails.
Lots of wicks on the top and on the bottom, right? So as it's coming into that line that we drew on the hour chart, we are getting loads and loads of pressure, both on the top side trying to push it down, and on the bottom side trying to hold it up. You can see that, right? The buyers kind of won out. So all this tail activity was pressure from the sellers. They gave up during here. However, they've come back into the market and have pushed it back down. So as we speak, that market is dropping right back into these lows right in here. So we're expecting a little bit of choppy trading in this session. One other thing is fundamentally, we always need to know what's on the schedule, what's on the calendar for fundamental news. We haven't talked about that much yet this week here, but a lot of our discussion, the latter part of the week at the boot camp, is going to be focused on those fundamental discussions, because that's what drives, the fundamentals are what drive the bigger trends in the market. That yesterday we talked about that cookie sheet with the water. That's what drives where that water is going in that cookie sheet. So we're gonna expect a little bit of that choppy trading, because today at 10 o'clock Mountain Time, we've got a speech from Fed Chairman Powell, and right now there is cracks. Like, have you seen those dams, the cartoons, on the dams of water? And there's like these little cracks that start to show up, and the cartoon characters like sticking gum all over and poking a finger in and poking a finger in there. Well, we're starting to see some cracks in the bond market right now. And so what the market is hoping for is that during this speech this morning from Fed Chairman Powell, that he starts to poke some fingers in those cracks that are showing up to try and stop what could be a really bad structural situation in the bond market. And so I think what's going to happen is we're going to see a lot of that hesitancy, uncertainty, at least until he speaks this afternoon, and hopefully gives us a little bit of clarity as to what the Fed's plans are. All right, we're right down on those wicks right now, so let's just jump right in and get some trades on, because we don't want to miss out on a great wick. So Ted, I'm going to give you the mouse. Let's go ahead and let's just put 5 buys in. Oh, hold on, we got wrong lot size. Okay, now go ahead and let's put some 5. 1, 2, 3, 4, 5. Now, what this trade, what we're trying to do is we're trying to catch a little wick activity on that chart. Do 5 more. Good. Go ahead and submit there. Okay, so now we're starting to see that wick come in. The analysis that we said right in the beginning is we see that wicky market behavior. We might have missed a little bit of that. Come on, jump up a little bit more. Okay, if it pops back down a little bit, we're going to add a couple more positions to this. But really what we're hoping to form is a wick here. Yep. As it drops down, we'll add a couple more. Okay, add a couple right here. Add a couple more. And add a couple more. Couple more right here. We're going to build up to about 3 positions, 3 lots, and then pause here. Right here's, as it's coming down, it was starting to slow down, and it's slowing down right here, but this is a place where it could pop down and form a lower low. So we're going to hold off and wait for it to build momentum if it breaks. If not, we've got a good position right here for a bounce right back up. See that little bounce coming in?
Yes. Mhm.
So hopefully that'll bounce just a little bit more and snag that first layer of targets that we have on that chart right there. Okay, slowing down. We're feeling that slowing momentum coming in. We're not out of the woods yet on these trades because it could still build momentum to the downside if it breaks. So we don't want to add too many more positions right here. We'll wait for it to pop up, and if it pops up and then drops back down, then we'll look at reallocating those trades back onto the books. So there we go. We've got a nice little pop hitting some of our targets. Beautiful. Beautiful. A little bit more, and we start to really build into some nice profit on that trade. There's pressure on it. Yeah, those sellers are definitely wanting to put some pressure on that dollar. Or sorry, pressure on that that euro dollar. Okay, right here, we're going to either see the market pick up momentum and make a pop higher, or right here is a great place for it to make a move back down to the lows. So if we're going to do a little bit of that adjusting where we're peeling off positions, this would be a great place to do that, because if we expect that market to drop back down, then we'll want to close out of a couple of these losing positions, and then we'll put them back on in the on the low side. So we're, but we'll wait and see. This is on that longer term chart. We should see a tail on that 5-minute chart form. So we'll see if that comes in. It's holding in that upper range, which is good for this trade. So it's holding in the upper range of that reversal candle. But it's not following through yet. So let's close out of one of those. So we just booked a loss. All we're doing with a trade like that is making room so that we can reallocate later if we need to. Okay, looking like it's starting to break, hitting the target set right there. That's fantastic. And then we've got those first 4 trades left. One more here. So let's close out of one more of those lost trades. Now we're down to about 4. So now if it drops back down, we'll allocate those trades back onto this is why we call it the wobble, because if it drops back down, we'll put another set of trades on at the low side, rallies back up, we'll put some trades, we'll close them out. And so we're just going to kind of wobble through a sideways consolidation if it starts to form. It's exciting, man. We just hit the ground. We just get the ground running this morning, didn't
sure.
we? No rest for us this morning. All right, let it drop just a little bit more and then get ready to add a couple more trades on. It's not going to drop, is it? Just going to kind of run. Now we're seeing those wicks on the underside of the market. Okay, give it a second. Give it a second more. Let's see if it drops. So go ahead and add one right here, just one. And I want to see where it puts the target. That's good. So anything below here, we can start to add a couple right now. And then we'll let it drop a little bit more if it's going to, and then we'll add a couple more. Okay, right here. Oh, you missed it. Gotta be quick. We gotta do we gotta do those finger exercises, huh, Ted?
That's for sure. I forgot to do my finger warm-ups.
Finger warm-ups. Yeah, we didn't do our finger yoga. We have good time here at the boot camp. All right, so that's getting ready to try another test on the highs. So let's see if it can rally up there. Started to form a turn, but it's kind of, we're feeling that tug of war between the buyers and the sellers right now. It's pressing on the low side, so get ready. It could pop. It could, as it's, you see how that was pressing on that low right there?
Yes.
As it's pressing on it, it's working through all the support orders that are in there. All of those, there's a lot of like limit orders to buy at that point. So as it's pressing on them, it's just like whittling away at that order set there. And so sometimes you'll see it sit there, and then boom, it breaks through it. But in this case, it looks like it held, that stack of trades there held, and so it looks like it's making a run up to the highs. Okay, so now we're going to do the same thing on the high side. Right? Hitting a little bit of a resistance, popping back down. And really just kind of stuck in nowhere land right now. But we'll see. It's going to break at some point here. It's going to break and make a run. That's fantastic. We'll take that. So Ted, notice what happened. We peeled off one of these top trades here, right? And then we put it back on. We made our 2 pips and on that trade. So we took a loss on one, and then we put it back on and made our money back on that trade. So that's the value. We've talked a lot about, booking those losses this week. That's the value. That's what we see when we take those losses off and can reallocate them. It's an important function in creating income from the market, is just getting those losses off the books. And then, letting some stay on in case we get the good run like we're seeing right here. Looking at some questions in the chat box over here. What is your take on an overextended bar pulling back about halfway? Good question. So it's almost doing right.
Yeah.
We've got a bigger ATR candle right here. As long as it stays in the upper half or the lower half of that candle, there's more pressure in it continuing the direction. If it retraces all the way, then there's a greater chance of a reversal. So it's just not a certain, I wouldn't. That's just kind of a rule of thumb that I use. If it retraces about half of it, then if it retraces a half or less, then look for it to continue. If it retraces more than a half, look for the reversal. Ted, fantastic job. That's
I
good
didn't-
trading.
I didn't know I had it in me.
You are a great wobbler, Ted.
Yeah, I wobble a lot at home.
Well, we just have to keep doing that. All right, so now we got to wait. We need to just wait and see where wait for another move, either a continuation of this reversal or a retracement back down. Let's kind of think through what happens today. If the Fed steps in and makes some policy adjustments that are makes it easier for the economy, will that strengthen or weaken the dollar? So we would expect to see the dollar strengthen. Kind of depends on what he does. It's hard to know, but if he injects easy liquidity, then we should see the dollar weaken, the euro rally, because money will flow. Remember, we talked about flow. Money will flow out of the dollar and into other investments. Does that make sense? If he makes it so that their other investments are not as lucrative, money will flow out of those investments and into dollars. And so then we would see the dollar strengthen. So what we're seeing right now with the dollar strengthening or euro dollar weakening and the dollar strengthening may just be either chatter before the announcements, meaning he may not make some easy economic policy. But it also may be just positioning, trying to accumulate a bunch of positions or prior to the event. So it's a little difficult to read at this stage. All right, another push back down, and we're going to add a couple more longs to this.
Couple
Not quite yet. Give it a second to. It's okay. One trade never hurts too much. We've got what's that show where they get the answers from the audience, participating audience? You push the oh, go ahead and add your trade. Oh, we got so many things going on. Add it. Okay. Add a couple more. Okay, so we'll get up to about 5, so 2 more. There we go. Now we're in stack number 1. Add a couple more. I think you were getting fan calls there. Everybody sees you on TV and they're like, "Go, Ted."
Caller ID says the police department.
Police department. That's not good. We're on the run. Okay. We'll see if we can get a little pop here. Oh, it's all over the place now. Word is out. All right. So here, this is the second the second major test of the lows. So go ahead and add as it pushes down, right in here. We'll add, but ever so slowly. We're just going to slowly build into these positions on the lows. So as it pushes down, we buy and hopefully add a little bit to that buying pressure. We're nobodies in this market, but we're doing it and 1,000 other people are doing it, then there's a reason for it to reverse here. So let's keep doing that. If it pushes down, we'll add a little bit right there. Ooh, that beautiful trade right there. And a couple more. We'll do this 5 more times. We'll build up to about 1.5. Those are great trades, Ted. Oh, that one wasn't so great, Ted.
I didn't want to make you feel bad about doing it too well.
Ooh, beautiful. Nice. Very good. Yeah, we're getting that. Okay, now if it pops down again, we do that whole routine. This is what makes the wobble technique so valuable, is because right now, most strategies don't have a clue what to do during these sideways consolidations. Well, we've just booked, a good chunk of change where the market's gone nowhere, right? Unfortunately, are you good? Are you okay?
Yeah, I'm fine.
Oh,
I'm trying to get started.
you're good. We're a very accommodating group here.
I'm just trying to get that off.
So the market spends, a good majority of its time moving in these sideways consolidations when there's nothing to do. Well, with the wobble technique, we can start booking little bits of profit into the account over and over and over and over again, which always bodes well for income. All right, if it pushes down again, you know the routine, right?
I do.
Okay. Chuck says, Sean, I've watched these sessions over a year now, and I realize that you always have 600 plus pips when you start. I'm stacking the deck. I got to stack the deck before I got to buy some wiggle rooms. No, usually I do. I usually trade, for an hour or so before I trade with my guests, and I am trying to build up a little bit of income from that. Same concept. It's the very same way. I'm just doing a lot slower and a lot less commitment when I'm with a guest trader, so we can walk and talk and not trip over ourselves. Yeah. I got my teleprompter up here. Keep feeding me those lines. Boot camps are great, especially on a Thursday. Monday we're all a little stiff and it's hard to get to know anybody, but like come Thursday we've not got any sleep. We're all we've got toothpicks in our eyes. We've traded nonstop for what is 4 times 24? 96 hours straight. We're doing great about now. Okay, now this is the big moment, whether we see a reversal. Look over here on that 5-minute chart, Ted. We've got that's the reversal point on that 5-minute chart. So if we take a break trade here, that's a very good option. See if we can catch a little bit of momentum. I'm not so good at the break trades. I've given my disclaimer there. So we won't trade very heavy because this happens very often. It tricks us, right? That little trick, that little wick, the wick trick that the market does. So what I prefer to see is a little pullback from here, and then I start to add usually. But this one might work out. You may bring some good breakout mojo.
I thought I'd take that chance.
Let's see. Still trying to run up, so that's good. Good question. Jerry asks when we're up at the top of the channel, why not put some sales on? That it's the consolidation on that 5-minute chart. So we've had 2 to 3 candles on that 5-minute chart. So it's either going to try and make a break here and move higher, or it's going to pop back down. So on the second or the third attempt to make the turn higher, to make the break higher, I typically don't go into the sells on the second and third attempt. Just because, if it's gonna do the break, it's gonna do it on that second, third attempt. So So as I wobble, I go in stronger on the first attempt, second attempt a little less, third attempt not so much. Okay, 2 wicks now on those top on that break. So now that'll open up the door for a move lower. So let's get ready on that move lower. We'll start to add another long.
Okay.
Yeah, we're gonna stick with the long side here. All right, let it pop down. It tried to make a move lower and it got the wick, right? So we'll see if it does it again. We'll wait for it. A lot of patience in trading. Yeah, no, you're good. If you miss out on it, we don't cry over spilled milk. We just let it do its thing. There are so many trades that we can take. If we miss one, it's not a big deal. Now, this is the, no, see, I was going to say that is the test right there. But everybody knew that and they slammed that thing down pretty hard. Go ahead and add another long right here. And another one, another long. It's feeling like it's trying. There's a real struggle, tug of war here, another long. This is a wobble build. We're now building. So it's got that pressure's coming back into it. So as long as it holds in this upper range here, which it just did. So we put those trades on in the latter stage of that minute. Does everybody notice that? We put those trades on in the latter stage of the minute because as it's pressing up in the latter stages, there's a better, higher and higher chance that it's going to hold above that resistance line. So that's why we added those trades. Still a lot of pressure, but now that pendulum of opportunity has shifted over to the buyers. Now it's all probability, so the sellers can reject that and negate that real quick. But the pendulum has swung to the bias of the buyers now. And we'll see if we can nab those trades. Yeah, we were definitely looking for that body break. And that's why we held off to that last few seconds there. Very good, Ted. That's fantastic.
It looks like it's up against the trend line on the 5-minute chart.
Yeah, it's pushing back. Remember, we drew that line on the hourly chart. We're just kind of spinning around that line. We've got a little bit of price behavior underneath it, a little bit above it. And we're just kind of going back and forth around that line. So that's why when it broke down here, that's why we stacked in some long trades, is because we're expecting that market to come back up to that line. Okay, now we need a pullback. So as long as we can get a pullback, we're going to start to add another set of trades. There's no bias. I think we said that. The question is do you see bias to the long side? Not a bias. We don't really have a bias in the market because we have the market that tried to break higher earlier in the week, and then it failed and broke lower in the middle of the week, and then came back up and then down. So what we're doing is we're just kind of have price behavior above the line, above the support level, and price behavior below. And so what we're seeing is as we get away, sellers are bringing it back down to the line. As we get away to the bottom side, buyers are coming in and pushing it back up to the line. So I don't think we're going to see anything really truly run away until the Fed speaks, Fed announcement later. All right, hopefully we get a turn back down to test that break. Now is not a position where I really want to build in the long side without it pulling back a little bit. So we'll wait for a pullback. Yep, you got it. Karoi. Karoi. Karoi, is that Hungarian? Carolus. In Hungarian, it's Karoi. Karoi. Yeah, we're just waiting for a retracement, the first retracement. That's my favorite trade, Lithuanian. Close. Same area, right? Same region of the world. Not. It's being persistent, if anything, right? Slow and persistent. You've never heard your name said like that. That's a Hungarian twist. All right, nice, looking good. Come on, let's go a little bit further, a little deeper, pull back. Carlos. That's good. All right, now it's trying to make a move to the high side again. But so if you look at how price is structured, we've had 4 bars of rally, then some sideways, then 2 bars of rally, then some sideways. So the momentum is starting to wane in this chart. So even if it makes a run up, we may want to, at this point, we may want to fade the top side of this market. That can get us into some trouble because, but we don't have much else to do at this point because we don't want to build a buy right in here because it's already moved a full price cycle. Just wait. I'm glad that's your hand over there because if it was my hand, I'd be like clicking. Oh yeah, yours too, huh, Vance?
That's why I'm here, Sean, to kind of
tame me a little bit. Elemental 1, an hour to 2 is probably I would say, I've worked with traders for many, many years. And I think that, 1 to 2 hours of trading and your mind starts to go mushy after that. So I know that I put in, 24-hour trading sessions before, but it's a lot nicer when you get in, you spend an hour or 2, and then you get out and go do something. Then you can come back later. Yeah, I'm debating whether to sell right now. The only thing holding me back is that the volatility is not, there's no volatility. So I'm looking for some volatility to start to, there we go. Looking for some volatility, some bigger candles. The fact that it's holding in that upper range for as long as it is, it's building tension in the market. And I don't know which direction that tension is going to break, but it'll break. And once it breaks, then we'll make our decision. Let's go ahead and add a long right in here. 1, let's see where that puts us. And this is just what I call a marker. So I'm just going to try and set, I want targets underneath the top of that consolidation. So I throw a trade on just to see where it puts my targets. Right now, add a couple more. There we go. See, now those target lines are coming in on the top. So yes. Now all it has to do is make a quick run up to the top. Doesn't have to break anything, just has to make a run up to the top.
Okay.
Add another one here. Nope. It tricked us.
All right.
Add one here. It's doing it again to us. Why is it? It's like it's trying to make its move lower, and then we go to click the button, and it's like back up. Yeah, we wait. See on this candle, see how it'll pop all the way up, hit those targets. Now it doesn't even have to break in order for us to make money. That is beautiful. If you can get that easy money like that, you don't even have to make the break. It doesn't have to work at all to make that money. You see? Add some more right in here. Beautiful. Oh, that was great. Add more. Keep adding. Add a couple more and keep going. Click submit. Add a couple more. This is all fantastic. This is exactly what we want. Now I'm all giddy and excited because we get some movement in the market, and then all of a sudden it'll just like tank on us. So we got to be careful a little bit. Keep going, keep going. Yeah, this is all great. This is just the first retracement of the turn. So keep going. We'll keep adding all the way down to those two lows. Those two previous lows. Keep going right from there. That's a fantastic place. Keep going. We'll go up to about 3.5. We're making money right there. That's good. Let it drop it. So wait for it to drop and then add again if it drops. That was fantastic. You did great there. I'd love to see some green on those charts. I love that. That's what makes trading so nice.
I'm so glad we're not in fix-it mode.
That's what makes trading so bad. All right. Well, you couldn't have done that any better. Honestly, that's as good as it gets. I mean, we could have like gone a little faster.
No, that's why I was getting back there all the time. Well, this is showing me there's a lot of become traders.
I should hit up the Dumb Traders Union.
No. Go ahead and add a couple here. Let's see if we can get that turn back up there. If it pushes down, add some. Not as fast as we did last time. That was a good place to add quick. You did great there, honestly, Ted. But here we want to build slowly back into, because what we're trying to do now is we're trying to form that next turn higher. Yeah, you got the wobbling badge now. You just earned your merit badge.
That's great.
Okay, right in here, slowly. This is first time is fast, second time is slower. Because we don't know if this is like a consolidation and then a push lower. So we'll let it do its thing. Add a couple more right here too. If it slows down, we can slowly add some more. But the fact that it tried to make its run back up, it failed and pushed back down, gives us this little line right here, this little support line is in a precarious spot. So don't add. So don't add until we know what this candle's gonna do. I've got a true wobbler. He's got wobbling blood in him. So we're just gonna wait and see what this candle, how it forms. And we watch how it forms and we keep an eye on the time. So there's 12 seconds left. 10, 9, 8, 7, 6, 5, 4, 3. Now that's good, right? That's good for our trade. we're not out of the woods because we need to get back up onto the high, the turning point. The body 2 candles ago is the turning point. There we go, right there. Okay, add a couple. So we're looking for a turn here and a test of the highs. Good, that's beautiful. Let's see if we can nab those last couple trades.
Yeah.
There we go. And the test of the high. That is just, that is as classic a move as you can possibly get right there. Okay, so that's what we were waiting for. Remember all this waiting, sitting on our hands, and, not doing anything, 10 minutes ago. We were waiting for that pullback and then waiting for it to make its turn and it's run back up to the highs. That's the easy money. And now we got to wait for another setup. There's a question here in the room.
When it reaches that high, short term, shorter.
Yeah, this, because we're forming that turn on the 5-minute chart, we expect 2 to 3 candles of follow through on the 5-minute. So this isn't a great place to short, because we would hope to see that follow through on the 5-minute chart. So now if it gets up to these highs over here on the left side of the chart, then we'll try and put some shorts on. John Parlberg, does Red Cross take W blood? Good line. Yeah, let it run 2 to 3 candles. So very easy to try and fight that candle, but that's a bad candle to fight. When we were, let me run the mouse real quick. So when we first got started, we faded this move here, but we weren't fading until we were down into these sections, right? Because that's now 2 to 3 candles of movement. So we're waiting for 2 to 3 candles of movement here, and then we'll start to fade, like maybe right in here a little bit. So go ahead and sell. Go ahead and as it pushes higher, go ahead and slowly, just very slowly, because that candle's not done yet. There we go. And let's see if we can get that pop back down. It should be, we're actually in a really nice, those targets are coming in a really good spot because we've got these peaks over here. So, but now it's fighting that momentum that it just created. So, typically that momentum will it'll either shoot down real quick or it'll kind of fight it like it's kind of fighting now. There we go. Beautiful. Okay. It may look subjective, but there is there's a question in the comment box. After 3 years of watching your trade, I'm still not sure what you do, why you do what you do. Price cycles, support, resistance, bias, fibs, market structure. Nothing seems consistent. All of those things play into what we're doing in the market. Structure, where it is structurally, what you can't do in the market is you can't say that I'm going to do this all the time. Like anytime you get into like rigid rules in trading, you're going to push yourself down the success path or down to lower success. So because, one type of behavior during the early structural phase is not appropriate at that structural position. Later in a structural phase, it's appropriate, right? So you kind of got to, all of those things all the things that you mentioned, John, kind of go together to create, whether you're going to fade the market, whether you're going to build, whether you're going to do these different things. So it really is, it may look subjective, but it's, a lot of it is just based on, structure, like the things that you said, and where you sit in relation to all of those things. A lot of variables. All right, now the big question is do we try and make that test? Do we try and test the highs? So typically when we get a pullback like this, I'm usually adding trades to try and hit the high one more time. The problem with this trading session is that we're, like we said right in the beginning, we're trading around a support level. So the highs are getting pushed back down, the lows are getting pushed back up. And so if we try and go for the high, is it one of those times when it gets pushed back down to the support level, or is it one where it starts to run away? And I would tend to say that given the market structure today, it's one that pushes back down. So I don't know if we're going to add the longs yet, but a deeper pullback we will. So if it drops another leg lower, then we'll add the long. Yeah, small outside range. So there's a little bit of buying pressure there. Yeah. So let's see if it does it again. Just add one trade right here, one long. It's a little too early. What I'm trying to do is, if you look back over here, right above, what I'm trying to do is get that target underneath those highs. Okay. So it overshot the mark. It pulls back. If we're going to get a test, if we're going to get a run back up, it'll either run to, let me run the mouse real quick. On the run back up here, it should either hit this level or these levels. And so what I'm trying to do is trying to get a trade that targets right here, because that's the easy money, right? Hit that. If we force it to go back up, that's a little bit harder. See, that was the easier money than the run all the way back up to the top. So see if it pushes down another leg lower. Someone's asking about the outside range. So the outside range is basically where you've got two pivots, a pivot high and a pivot low, and the market breaks the pivot high, giving you long signals, and then retraces all the way down and breaks the pivot low, giving you sell signals. That's why the outside range is so difficult to trade, because it's giving you signals both directions. Question from the room?
Is that, you hear a lot of people talk about, they're just taking out people's stops because there's no real fundamental reason for a market. Is there any truth to that?
Yeah, definitely. Yeah, definitely. It's a tried and proven strategy in institutional circles, right?
Retailers.
Well, I don't know if it's I don't know if it's like a malicious thing where they're trying to take someone out.
They know the smaller traders stop. They know there's a lot of stops at this one level.
Well, if they know they're trying to make the market move higher, right, then sell it off, accumulate all of those sell orders. So you start the sell off, and then as it's going through, you start a buying frenzy, right? And you push that market higher.
You do some sell
Uh-huh. Oh, yeah. Let's let that run for a second, and then we'll fade that.
fade and sale. Right?
Sell, yes. In this case, it's a sell. Oh, sorry, my bad, my bad. The question from the room was whether, this idea that they push the market through support levels to try and take out retail traders or to take out a support level. So sometimes you've got a support level and the market gets pushed down through that. There's all this stack of there's a stack of buy orders, all these buy orders right in here. Sometimes institutions will push down through that, because it wants to trigger all those buy orders. Yeah, the trampoline, that's exactly what it turns into. Boy, it's kind of losing its bullish momentum, isn't it? Can the wobble be done in volatile markets? The wobbling can be done only in volatile markets, or does it work in slow markets too? It works in slow markets, obviously. It works in any market that's moving, sideways or has good up and down movement. Whether it's slow or fast movement, just depends on how often you build positions or take off positions. So it's a strategy to use the price structure. Yeah, everybody wants to be at their trading desk for the PAL speech. Okay, let's give this one a chance to run low. So I'd rather see this one break that support line before we build into it. Build along. So that was a failure. What we just saw there is a failure for it to break higher and continue that upward momentum. And so what that's going to do is it's going to open the door for a move back down lower. And that's why I want to hold off on putting a buy order in right now. Yeah, I don't want to do a sell because I don't want to fight that momentum. There's still a lot of everybody looking at that chart says, hey, buyers are in control. So I don't want to sell yet, but let's see if it breaks this little support. Man, it's rallying back up. Just watching how that forms. So right now, how the candle forms is as telling as how the candle closes. So as you see that candle forming, I'm watching how many times it rallies up, gets pulled back like that, rallies up, right, like this, gets pulled back down. I'm watching that to kind of give me a sense as to whether it's building the momentum to pop higher or whether it's going to get get shoved down to and go lower. Watching it, watching it. This is a great place for a wick. Early in the candle, if it starts to pop up through this resistance level, we'll look for a wick to form. Waiting for it. If it holds that upper side, we may throw a long on, try a little build trade. So get ready. We'll watch, I'm watching how it comes down. If it holds like right here. This is where we get in trouble.
Yeah.
Go ahead and throw a long on right here. And another long right here, just one. We don't want to trade big right here. And one more long. Looking for that. So it closed, it formed a higher high. So now that's why we're building into these longs, is because it actually closed at a higher high. So now the advantage is in our side that we should get 1 to 2 candles of follow, or sorry, 2 to 3 candles of follow through in the upside. Because it's already moved so much, I'm not sure. And because of that analysis that we had in the beginning, where it's getting pushed back down on the outer edges around that support level. So I don't want to go big on a trade like that. Now, if it comes down to the high of that candle right there, I can't show everybody on the mouse, but can you point to that candle? That
This
one. If it comes down to the high of that, let's put 2 buy orders in right there, or 3. We'll match what we have, 3. But it's going to have to come down to that point before we do it. Because that point is a great place for that momentum to step back into the market. If it drops below that, we're going to try and fix these trades that we have. So we'll be on the wrong side of that. Go ahead and add one.
And one long.
One long. Let's see. It's on a razor's edge right here. I don't like how long it's sitting there, because that momentum, there's a lot of sellers that'll push that thing down in a heartbeat right now. So I don't like that it's sitting there. I would have preferred to see that momentum, that buying momentum, come back in. What I'm gunning for is a test of that high back over here on that 5-minute chart. We're just going to try and, I may be wrong, but I feel like the market, this is subjective now, but I feel like the market's going to try and make a run up there, at least to try and test that high. So, but this is a subjective trade. Okay, this is where we can hope to see a little momentum come in. Don't want those sellers pushing it back down. We want the buyers to overwhelm them. Okay, we got a little bit of momentum, not what I was hoping for. Little chance on that second candle to follow through. If it can push higher, no, got rejected. I was going to say, if it can form a higher high, then we can start to see other buyers stack on top of that, but it got pushed down. Yeah, this is pretty much a no-no. Josh, thanks for putting it so eloquently. Does it? Yeah, Scott's like, does that ever stop, Sean? Yeah, this is not the best trade we've made today. It is. There's a couple of things that are in our favor and a lot of things that are against us right now.
I have a question.
Question from the room.
Like you're on at the edge of end of a branch, like the branch just keeps getting
Longer. Yeah, so the comment here is like, it's like you're on the end of a branch. You got this nice, beautiful tree. Go highlight the tree right here. And the branch just gets go longer over here. Yeah, the pennant is definitely one of the things that's in our advantage, but if this type of pennant can break down really easily because it's too long. The pennant is way longer than the branch or than the tree flag pole. All right, come on, just one little pop. Not gonna do it, not there. Let's see, let's close out. Hold on. Let's close out of one of those trades, the top trade. There we go. That'll stimulate the market.
So you close out the top trade.
Close off the biggest losing trade. Come on. It's holding. Ted, it might actually do it. It's holding in that upper range. Pressing on it, pressing on it. Don't want to see a wick there, and it's starting to form a wick. Let's close out that top trade. Let's close out of both trades. Too much. Yeah, so this coil is getting wound up too tight. And the tighter it gets wound up, the spring effect's going to start to influence it. We'll get a big move one direction or another. It's 50-50, but I would say there's more signs to the downside than the upside right now. So probability is like it's holding in the upper range. It's got a nice little upward trend coming into the highs. It could break to the upside, but it's just too much, especially where we're like really close to our target. It's just too much to lose everything on that would not be a good thing. So we'll close it out for a little break even. It's not a pennant anymore. The pennant, the flag formation, the pennant formation is way too long for a pennant. So just for those of you who are learning price patterns, that's a weak, not a good pennant pattern. It may work like a pennant, and next time you'll be like, oh, the pennants can go for 50 bars, but they can't. All right, it's starting to break. All right, we're gonna do one last trade. If it gets up there, building momentum. If it gets up into there, we're gonna sell out just two. If it gets up to those highs, sell two. Sell two.
Right now?
Not yet.
Okay. You want the body up there, I guess? Just the wick.
Sorry.
I guess the body causes the wick anyway.
Yeah.
So the body has to get there.
Just has to get up there. Yeah. We're expecting a little pullback. Just nothing right now. hard to make money when it doesn't move anywhere. When there's no movement. Anybody got a good joke?
I'm going by fast when you're doing this.
Yeah, we're into the session a full hour now, so yeah, people are just sitting on the sidelines. There's no advantage for moving the market right now. So that's why if it ran up to those highs, I would be comfortable with a short. Go ahead and push a little short in right now. Let's see if I can catch a little momentum to the downside. Yeah, that's good actually. Go ahead and add a couple more. See if we get a little bit of a momentum to the downside here. What I like is those targets are coming up on the highs. Remember that used to be a trigger for the longs. Now it's going to be a support for the shorts. So very good. Add another short right now. And one more right here. Okay, good. Now I'm going to do quick adjustment real quick. I'll put that up just a little bit. I'll bring that down. I'm going to add one more. Two more. See, you were saving me, Ted. I want easy money right here because we're trying to hit our target. Our target is 409. So I want the easy money. Now I'm trying to hold those targets above. This was the turning point for those trades, like right back in here. So we're trying to hold those targets above that line right there.
So you're going short now, Sean?
I am short now. That last little move is always the hardest. And it's always the one that bites us in the end.
Where should we put our take profit?
So the take profits on the shorts are all right up on the highs of these candles over here. So body high, wick high, body high, body low. So they're all right above that. This is just, we've got one quick chance to hit those targets and try and boost our equity up to that 1409. But
John, why do you like to put all your chips kind of make it look like one line?
why?
Yeah.
Because you mean the targets? Because I'm expecting the market to find support here, and I want to maximize both the income that I get. So I'm lining them all up so that all it has to do is come down and touch that line, and boom, triggers all of them
Now it makes sense.
right here. threading a needle. This is like needlework. I got the nicest gift in the mail. This we were talking about needlework, and so I got a little needle, like a little sewing kit. Someone's like, "Here you go."
Be careful what you say.
This is really threading a needle.
Oh, my goodness.
This has made me wanna like take up knitting or something.
Yeah. Do something with your hands.
Yeah.
I'm just gonna get ready to close some of those out. We'll zoom in a little bit more. See, that wick just came down and touched that area. Didn't follow through. So we need a body close right here.
Goodness, so close.
I know, but so far, might as well be a mile away.
What?
Oh, come on. See, it touched it and it just barely didn't nick our orders.
Was it that close? And you were positive, why didn't you close out?
I was trying. I didn't do my yoga exercises.
Just wait, man, you supposed to go there.
I was really trying.
That's what happens when I let go of the trigger.
Yeah, that's
man.
right. That's exactly right. Don't let me touch that mouse again. This is hard. This is
Put on
tough.
more shorts now that it's coming back up that,
Yeah, we could. I'm just leery because it could break, right? So I'm a little leery of it. If it was me trading on my own, I probably would. But because I'm trading with Ted and he's like just reprimanded me for touching the mouse, I've got to like, I gotta follow the rules. Samir, the best currency pair is one that moves. So I'll trade the Euro USD for the most part, just because I've traded it for so long. So oh, you got nominated to permanent trader status.
Oh, really? How soon is he gonna be cut off from the?
I think
Trading.
I think he likes how well you're doing.
Oh.
So to answer your question, would I be putting shorts on? Probably, but this is really where this is one of those points where it can really sting you if you're on the wrong side. So playing it safe, probably not. You know, if you're more on the aggressive and intuitive side, then probably yes. But
Yeah.
30 minutes to Pal. Ooh, we don't want to be in the trade when he gets on. We don't want to be trading.
Oh, my God.
All right, this could be the run higher. Let's go ahead and add, wait for it, add two here.
shorts.
Shorts, Yeah, we're on the short side now, so one more. And one more. Got it. I'm going to do some adjustments
Okay.
on those. I'm going to pull these up. We're going to try and target right above this line now. A couple more.
Wouldn't it be reasonable to think you could get 2 pips while it's going up?
Maybe. I mean, yes, I mean, if that's the way you're looking, we were already in some shorts, so we're kind of, we either have to take the loss and then make that up, or we anticipate that market to hit some outer edge and come back down. But if I were you, I would say yes, definitely. That's an opportunity to make money on that high side. Okay, so now we're up on that resistance line and breaking through. So we'll build a couple more. And again, this is where the market starts to punish us. So now I'm going to try and build so that we just get, all we have to do is hit the top of that line there. And a runaway. We don't have, man, you need to start taking this trade back over, Ted, because I'm doing a lousy job here.
Well, you've got to learn, so I'm good to go.
Okay, I'll take that. I still got some things to learn about trading. I'll admit that. Definitely, especially right now, Ted. Okay, we're gonna try and get a little quick pullback. Come on, grab those targets, grab those targets. So the money will be made on this, and then we just going to try and break even on the rest of that. So that's why I've got to get a big enough stack up here so that we can make enough money to put us in a break even if we can get down to here.
Makes sense.
I think that spike was a result of the speech.
Was it, do you think? No.
No?
I don't think so. Not yet. Maybe someone slipped something and it's like, hey, Goldman, I'm getting ready to do a speech. I'm going to say this. No, wait, did I say Goldman? I shouldn't have said Goldman.
Are you near your target? You did your target.
Not quite. I need to go drop a little bit more to hit that. If we can hit this stack right here, we're in great shape. Chances are not, at this point, chances are kind of 50-50 whether we drop all the way back down. Is that really the headline on Apple News, Richard? Richard's like, Apple News. Read that headline. Can you guys read that headline? It's like Apple News on iPhone. Stocks wobble ahead of pals. They knew Ted was trading. Come on, we got to hit that in order to hit our target. Come on, come on, come on. That's hilarious. What a great headline. You got to take a screen capture of that, send it to me. We'll put that on our. Oh. Ted.
Wow.
We'll close these out. We don't want to have to wait through another run. There we go. Fantastic. Yeah, Ted. You did great.
Well, thank you, Sean. It's been wonderful to have you here as my guest.
As my guest. I love it.
This proves there is a God, I'm telling you.
Well, that was quite a session. That was quite a session. You did fantastic. Is there something that you could maybe share with the group out in the tap room, in the trading room, something that you learned from the session that while I take care of business, I gotta, he's going to make some money here. So if you want to share something with them.
I'm learning better how to lose and be a good loser.
Be a good loser.
I'm learning to be more disciplined in my trading. And I'm learning not to be too frustrated at the losses. And I'm learning what a good company this is up here. You have to be here to really experience it. And I'm sure a lot of people have a lot of faith in apiary, as I did for the last few years before I got here. But, and my fellow students are just wonderful to be with. And I'm going to forgive Vance back there for his misdoings.
We got well, I'll tell you what, Ted, it was a real pleasure trading with you today. How do you spell your last name?
Wilson.
W-I-L-S-O-N. Okay, I'll tell you what here. We made a day's worth of wages in the market. So you got to be happy, to spend an hour and a half in trading and be able to pull out, a day's worth of wages. That's the first thing. So we'll share that profit with you today, which will be great. But then I'm going to share my trading session with you from earlier this morning. So I'll throw that into the kitties here. So I don't know if you can see that. Kind of hard to see, but $1,418. $1,418. There you go, Ted. I love it. Super great.
I can't
trade.
believe it. I said there was a God, didn't I? A while ago. I appreciate you, brother.
It's a real pleasure. Thank you.
Oh,
Here, stick here for just a second. Let me everybody, let's say thank you to Ted for that great trading session. It was wonderful trading with him. We'll get ready to sign off, and then I'm gonna take a picture with Ted here in just a second. But this trading session was the big takeaway from this trading session is that clue that we had on that 5-minute chart earlier, or sorry, the 1-minute chart. Was it the 1 or the 5? 5-minute? Yeah, right in here. So all of this was our clue. We have the Fed announcement coming in, and then we had this clue about the market. All those wicks above, all those wicks below, coming into that major support level that we found on the daily chart. And our thesis for the trading session was that we were just going to trade around that level right there. So as the market dropped down, we expected some pressure to come back up. As it pushes up, if we had more time before Powell's speech, we would expect that to drop back down. So I think now once Powell's speech comes out, we're going to see the breakaway move, whether that's to the long side or to the short side, who knows, but that is what we expect at this point. So that's our takeaway for the day. Thank you for joining us. It's been a great trading session, and really appreciate Ted for helping us out today. So It's not easy being in that seat over there. A lot of pressure.
Enjoy yourself.
All right. Thank you, traders. We'll sign off now. We'll see you.